Amazon is actually my largest position and will continue to be, simply because I think when it comes to using data and selling products and services, not only are they the smartest company in the universe, but they're also the ultimate startup. They can not only use that data to know what to sell and how to sell it, but also to help guide them on what business to get into. And they're not always going to be successful, obviously, in every attempt, but the leverage they have, the data and the knowledge base they have with artificial intelligence gives them such a unique advantage. All the FANGs have an AI advantage in this AI have and have not universe that I don't think people are truly respecting or understanding.
Interesting. Hey, we do a segment.
All right, so that was just Mark Cuban there saying his largest position in his own portfolio, the money that he trades himself, is Amazon. So Amazon just recently reported this week. I didn't do a video on the day of it reported. I was quite sick, doing much better now. But they had a monster quarter. We're just going to go through this article real fast and a couple of the key facts and takeaways of how Amazon just blew out the lights. And that's a good thing. Here's really the key factors here. You can see web services grew quite substantially. Again, nearly almost 10 billion. Revenues overall grew very well. And then earnings per share was just a blowout of nearly a $1.50, a $1.40 higher than analysts ever expected. Revenue grew 21%. That is also fantastic news. That was, again, this quarter fell into like the holiday season. So this is Amazon's potentially biggest part of a lot of they're sending out a lot of boxes. And this is a great thing too. So a lot of people thought that Amazon wasn't going to be able to beat the numbers due to the fact of their really mass expansion into India and so much investment into the one-day shipping. So Amazon claims customers shopped at record levels during the holiday seasons, and it quadrupled both one-day and same-day deliveries over that period. So they're investing heavily. They're cutting out a lot of the middleman, the FedEx, the UPS, and even in my area, you see the Amazon vans up and down the street every day. You're like, oh, there's a blue van. That guy's gonna get his book or whatever else he ordered from Amazon. It's quite impressive on how they're able to do this. And this is a really cool chart. So this goes back to the Q1 quarter of 17, and it just shows a beautiful revenue growth. Like, it looks fantastic. This over here shows net income. This is the, again, growing period over here, and then 2017 is the switch, and it just was breaking in billions at that point. We'll look on the chart. Actually, I'll pull that up real fast here on the chart. So we're going to go to 2017. You can kind of see what quarter was that? That quarter was Q3. So it was basically like this one. You can see here they made a nice base, and then this quarter in October of 2017, it just blew out the lights, and ever since then it's been kind of made a rocket ship from here all the way up to its previous high in the middle of 18, around 2040, so $2,044. And then since then, due to the interest rates and stuff like that, the overall market down there, and then 19 has just been somewhat flat. And then we come to this week, which is breaking out to an all-time new time high. Here we can see that this potentially it closed below the all-time high. That is, it closed at like 2008. Oh, that's kind of scary. 2008. Always want to hear 2008 at this thing of the stock market crash. So it closed at 2008. You can see it made quite a few tops. It needs to break out above this like 2025 level, 2030 level, and create a new base. Like a base meaning this tight movement up here. So let's go back into like a daily chart. Again, this thing has been trading somewhat trendy. I mean, channels into these really like wide channels of 1600 to like 2000. Just and then that now, a lot of people thought this consolidation on the 200 because Amazon hasn't performing like other stocks that are in its segment or it's in its lane. Like Apple was up well over 100%. Google, Netflix is probably more representative of what Amazon's going through, of making these consolidations of really not trending like other technology stocks or other companies that are in its time. But there's really nothing to really can compare to Amazon because they're an online business. They do technology, Amazon Web Services. They do all kinds of. They have their own products. They have it's really hard to kind of compare this to something else. So it's always hard to gauge on if it's performing or not. But it's not performing on the sense of it. While everything else, the market's making all-time highs this time of last year and into this year, Amazon really hasn't been there to reap in those benefits. You can see here just constant consolidation breaking down to the 200. This is a very showing that it's basically showing that there's so much capitulation. So for us in the portfolio, we actually bought in the day after this quarter because the volume was just so high. Like this volume was really high here too, but the volume here was, yeah, it was basically up here. Not as much as this, but it was just so far down. Like there was no way it's gonna break like the 1670 level. So we bought into it, rode it up to I think the nearly 1900. I think it was like 19, like right around this area. We were very worrisome of the quarter, so we got out of it. It was a nice trade. Yeah, I should have held maybe a little bit, but again, it's a $2,000 product in a sense. Like we were only like 2 or 3 shares at the time. Like you're kind of rolling the dice. So I wasn't the most confident going into earnings. You win some, you lose some. We still made profit, but we could have made substantially more. But it was kind of a gambling little bet there. We didn't like that because, again, earnings could have gone the totally different direction. They could have had the same numbers, but they said, oh yeah, no one's really going to get many products because the coronavirus outbreak, and we're actually seeing slowdown in sales all over the EU and Northern America or something. And that stock could be literally the opposite direction. It could be back down here at 1600. So I never rely too heavily on earnings unless I'm holding it for years for long-term positions. If I'm just trading it, I like to get out before the quarter. If this was like a $100 stock, I would have a couple shares in this thing, but it's a $2,000 product, and it's a really big investment in those shares. Let's look at. I want to show you some volume indicators to show you how crazy this volume is. So you can see here. This is just the volume for today. We had, what is that, 20 or 17? It was going to call it 16 million. So this is basically like on average it's about 4 million. So we're going to call it 4 times the norm of average. So we haven't seen that for quite some time. So let's go to a weekly chart. But that doesn't compare to a lot of its down days. So the December low of 2018, you can kind of see here it traded nearly 48 million shares, and in between that time it was like 48 to 50 million shares. So when you see Amazon in around this price trading these amounts, it's a good buying opportunity. Not saying it's going to get back down to $1,300, but the volume indicator is always a great little notion. So just on the weekly time frame, we're just looking at basically double of what its other norms have been. And now we look at a monthly breakout. So again, could you be imagining you're the guy in 2007 buying Amazon for $25, and now you're sitting on $2,000 shares? It's quite fabulous, isn't it? So you can kind of see here, this is the 2008 area here of breaking its low at $34 and then just ramping up. But Amazon has been honestly in a very beautiful trend. This is the, I like to use, this is the 21, and this is also the 9. So I want to be very cognizant on this. It's looking like it's going to be creating a brand new explosion higher. To be quite honest, this is very bullish, creating this pattern here, basically trading nothing over the last 2 years, just in a range. That basically kind of compares to like the 2015-ish, 2016, and then it just went rocket ship from there. Basically 3-4 timesing its money in the next 4 or 5 years. So to kind of compare this to like a Tesla, like this is definitely, the Tesla could be doing the same thing. We'll do a more in-depth video on Tesla later this weekend. But this being said, I would not be buying net Amazon up here. But let's go look at the deviation. So these are again the standard deviation. This is the third, second, and first. Most stocks stay between the first and second, but Amazon is not like most stocks. So normally, if it breaks out, it just busts through it. It kind of consolidates, busts through it, consolidates, comes back. What I can see here is most likely it's way above its 3 deviation. It needs to, these moving averages need to slowly catch up over the next week or two, and then potentially build another base. A base is anywhere from like a week or two of tight consolidation within the green lines. You can kind of see here, this has just been trading in and around these zones, and then just breaks out, boom. So if you bought it around like 1700, and then boom, it goes to almost 19. Pretty fast. Again, any news comes out about Amazon, because it's just so heavily monitored. It's a huge company. They have their fingers in everything. This for sure is, I foresee this kind of coming down a little bit, maybe trading to maybe 1950, building a base, and then making another run higher, because it needs to gather some energy and create that springboard effect, jumping into and maintaining its all-time highs. Again, guys, thank you so much for watching. This is Ken from the Dyslexic Investor. If you want to see more stock analysis videos, please leave your ticker symbols down below. Again, I'll catch you guys on the flip side. Peace.